Okay, now your cash flow from operating activities, I will work out the problems you will see now. See here one problem here. From the following information, calculate net profit before tax and extraordinary items. Okay, first we are going to discuss how to calculate net profit before tax and extraordinary items. They are given some information. That is surplus. Okay, where you are taking surplus, balance and statement of profit and loss. They are given opening balance. Okay, here the bracket, that means debit balance. That means loss. Okay, so whenever is shown as a within the bracket, it is meaning as loss. Okay, that is very very important. Should be very careful when doing the problem. Okay, then surplus balance and statement of profit and loss closing 3,36,000. Okay, then dividend proposed in the previous year and paid during the year 72,000. Then interim dividend paid during the year. Okay, there are two dividend. One is proposed, then interim dividend 90,000. Then transferred to reserve 1 lakh. Okay, provision for tax made during the current year 1,50,000. From this information, then refund of tax 3,000. Okay, loss on inventory due to fire. Okay, 2 lakhs. Then insurance claim received for that particular loss due to fire 1 lakh. You can claim. So insurance claim, money given from the insurance company 1 lakh. These are the information. Now how to do? See, calculation of net profit before tax and extraordinary item. That is the title you are going to discuss. First of all, you should know profit for the year. I said na, they are given two balances, correct? Opening balance and closing balance. So you always want to take from closing balance 3,36,000. You are going to deduct close opening balance, correct? So already it is a debit balance. That's why yes, you should be very careful. 3,36,000. Okay, minus, see here, 3,36,000 minus, again minus of 1 lakh. Okay, should be very careful. Okay, don't deduct just like that. Okay, already it's debit balance. That's why within the bracket minus. So naturally coming under profit for the year 4,36,000. Okay, from this add and less. Okay, two things you want to know. So as you know, dividend paid you want to add again, correct? Proposed in the previous year. Okay, during the year dividend we paid 72,000. Then interim dividend paid during the year 90,000. Then again transfer to reserve. You are again going to add, correct? Because appropriation of profit. Okay, that's why again you are added all 1 lakh. Then provision for tax. Here also provision. We just made provision. Okay, we not yet paid. That's why again we want to add 1,50,000. Okay, if I add all together, you got it 8,48,000. From that refund of tax. Okay, so money is not related to the business. Earlier, whatever tax you paid, the income tax company you got, they return back their tax money, correct? So refund of tax is going to deduct less 8,45,000, 3,000. Okay, 8,48 minus 3,000. Okay, then again we said na extraordinary items debited. Okay, again we want to add. So earlier our profit and loss account we shown the loss of inventory, correct? So due to fire. Okay, it is an extraordinary item. Expenses again we want to add 2 lakh. We got it 10,45,000. Okay, then less extraordinary item credited as income. Insurance claim received for the loss due to fire is income. Again you want to deduct. Okay, that's why you want to add that particular extraordinary item. Then you want to deduct that particular extraordinary item income 1 lakh. Finally we got it net profit before tax and extraordinary items. It is a very very important thing how to calculate our net profit before tax and extraordinary items. Okay, here that's why the format is very important. You should know why I am adding dividend. We discussed now all the 5 discussion dividend, our resources. Okay, then our non-cash, non-operating expenses like that. You will see one by one. Okay, then going for the second problem. From the following information, calculate operating profit before working capital changes. Okay, here they given. See net profit before tax 2,23,500. Then extraordinary items. Okay, 2,23,500. They given before net profit, tax and extraordinary items 2,23,500. Then depreciation 42,000 they given. Okay. Then interest on borrowing 8,400. Then goodwill amortization 9,300. The loss on sale of machinery 9,000. Okay. Then premium on redemption of debenture 3,000. Then interest and dividend received on investment 13,800. Then profit on sale of investment 6,000. Okay. I'll show you once again the information. See here. Okay. Now the question is calculation of operating profit before working capital changes. Okay, your next level. Okay, here we will discuss non-cash and non-operating items. Okay, from the problem also they given. We need not calculate net profit before tax and extraordinary items. They given already in the problem. Okay, 2,23,500. Okay. So net profit before tax and extraordinary item to 2,22,500. Here your only question is adjustments for non-cash and non-operating items. Okay. Your depreciation you want to add 42,000, interest on borrowings. Okay, you want to add. It's coming under non-cash, not related to the business. Okay. Then goodwill amortized 9,300. Loss on sale of machinery. Again you want to add. It's not related to the business. Okay. Once you want to add all non-cash items, 68,700, you get it 2,92,200. Then similarly, then less interest and dividends. This is also non-cash income. Okay. Received on investments. Okay. Interest and dividends received on investment 13,800. I'm going to deduct because it's not related to the business. Okay. Non-cash income. Again, profit on sale of investment. It's also non-operating income. Okay, 6,000. Okay, 19,800. So you naturally got it. Operating profit before working capital changes 2,72,400. Okay, I'll show you once again. See here. Here only thing you want to know why again I'm adding depreciation, interest on borrowing, goodwill, and loss on sale of machinery. Why I am going to deduct interest and dividends regarding received on investments. Okay, and profit on sale of investments like that. Okay. That's what finally you get it. Operating profit before working capital changes. Okay. Then going for our example 3. Here the given calculate cash flow from operating activities from the following details. Okay, the given the 2 years only 2020, 31st March 2020, 31st March 2019. The 2 comparative year. Okay, they given surplus balance in statement of profit and loss. Okay, they given correct. 3 lakhs, 2 lakhs. Then bills receivable. 1,80,000, 1,40,000. Then accumulated depreciation 3,20,000, 3 lakhs. Okay. Thereafter outstanding rent 40,000, 16,000. Then prepaid insurance 12,000, 14,000. Then goodwill 1,60,000, 2 lakhs. Then inventories nothing but stock 1,80,000, 1,40,000. Okay. From this information, we are going to discuss cash flow from operating activities. See here. Again here our first duty net profit before tax and extraordinary items. Okay. So they given 2 information. Correct. See here. I will show you once again. They are not given directly profit. You are going to calculate how it is opening balance 2 lakhs. 2019, 31st March. This is closing balance 31st March 2020, 3 lakhs. Okay. From that we are going to take. See here. Extraordinary items, net profit before tax and extraordinary items. Okay. The presentation very, very important. You have to write like this. Then from the closing surplus 3 lakhs, going to deduct less opening surplus 2 lakhs. You get it? Net profit before tax and extraordinary items how much? 1 lakh. Okay. Now we are going to add our non-cash expenses. As you know, what is our non-cash expenses? Depreciation. Correct. So depreciation is 20,000. Okay. See here 20,000 from the problem. See 3,20,000. Then 2019 3 lakhs. The accumulated depreciation is given. Correct. 3 lakh become 3,20,000. So natural depreciation is 20,000. That's what we're going to present here. See 20,000 here. Our goodwill, our depreciation. Correct. 1 minute. 20,000. Okay. Then our goodwill amortized 40,000. Now understood now? 40,000. So goodwill amortized 40,000. Sorry. Okay, this problem, so third one. Here, say the good here, say the goodwill 1,60,000, 2 lakhs. Here the natural goodwill reduced to 40,000. That's why here that 40,000 we are going to discuss here. Goodwill amortized to 40,000, reduced, correct? That's why we are going to add. Okay. Then our operating profit before working capital changes 1,60,000. Okay. Then we got it what? The formula, you know, what is how to calculate working capital changes. So naturally, what should be we want to add? Increase in current liabilities and decrease in current assets we want to add. Okay, that is the thing we want to add. See, outstanding rent. So 40,000 minus 16,000. Correct. Here our liability increased. That's why see, increase in current liability is going to add. So become 24,000. Okay. Then prepaid insurance. Okay. So 12,000 minus 14,000. Naturally decrease in current asset. Always you have to write our current year and previous year. That's only then only you know idea. Okay. So here 12,000 is current year 12,000. The previous year 14,000. So our current asset reduced. That's why we added in our profit before working capital changes. Okay, 2,000 become 1,86,000. Okay. Then going for our less increase in current asset. Similarly, our bills receivable. Our current year 1,80,000. Now our last year 1,40,000. So naturally our bills receivable increased. 1,40,000 become 1,80,000. Correct. That's why 40,000. And inventory similarly 140 become 180. Current year 1,80,000. Previous year 1,40,000. Okay. So become 80,000. So cash flow from operating activities 1,06,000. Okay. Here the point is very important point. So goodwill decreases. Goodwill is written off or amortized added as a non-cash item. Okay. Suppose goodwill increases, it will show in a investing activity because when goodwill increase, when you are going to purchase a goodwill from the other company, correct? That's why you should be very careful. You have to see whether goodwill decreases, only you have to show here as a non-cash. Suppose goodwill increases, you want to show in a investing activity. Okay, that is the idea here. Okay. Then we have a next one. Star Limited reported net profit after tax. Okay, here 3,40,000 for the year ended 31st March 2020. They extract from the balance sheet for 31st March 2020 and 2018 are given. Similarly, same manner. Okay, they both figure they given. Inventories 69,000 and 72,000 and trade receivables 94,000, 61,000, prepaid expenses 14,000, 3,000, trade payables 82,000, 78,000, provision for tax 13,000, 19,000, then depreciation charged on plant and machinery 49,000, and insurance claim received 20,000, and gain on sale of investment of 8,000 appeared in the statement of profit and loss for the year. Okay, ended 31st March 2020. Calculate cash flow from operating activities.